Good day, ladies and gentlemen. This is your boy Botshelo Sello. Welcome back to my another YouTube video. If you're not a member in my channel yet, please make sure to subscribe to my channel. So the topic for today is I'm gonna give you my secret strategy. So I'm gonna show you how to use my strategy. Make sure to watch the full video so you can understand how to use my strategy. So this is a secret, keep it to yourself. Don't forget to comment down below if you have any question about my strategy, and make sure to like the video. So let's get down to the chart so I can show you what I'm talking about. So before I normally place a trade, the first thing I look at is how the market is moving, because you have to see how the market is moving in order for you to know whether you're going to sell or you're going to buy. By looking at the market, I can tell you that I'm looking for a sell. Let me just show you how this trade is moving. So this is an impulse, and here is a correction, then impulse, then this is a bigger correction, then this is a bigger correction. But by seeing this, you know that the market is moving heavily when it's going to the downside. So obviously you're looking for a sell opportunity until the market tells you so. So you can see that here we're looking for sell opportunities. So that's the first thing that you should know every time you enter into a new pair. You should check how the market moves. Is it moving heavily to the downside or it's moving heavily to the upside? So I'm just going to show you the two best entries that make me profits, that really make me money. These two entries really want you to be really patient. So let me just draw a trend line here so I can explain what I'm talking about. So you can see even zones are extremely important. Zones are extremely important, especially on the bigger time frame. So I prefer the 4 hour on zones and on the risk entry. I also prefer the bigger time frame. So as you know, impulse, then this is a bigger correction. So obviously we're looking for a sell entry. So as you can see, this is a continuation pattern. So it's still continuing, impulse, correction, and continues to the downside. So it's still a continuation pattern. So I just want to zoom in so you can see what I'm talking about. So as you know, on the third touch normally, on the third touch, that's where we're gonna get our risk entry. So this is our first touch, second touch, obviously third touch. So here we were going to get our risk entry. Here it was gonna be our risk entry. It's gonna be our risk entry. So this was gonna be our first entry. So our second entry is gonna be after it breaks the trend line. After it breaks the trend line, but not, let me zoom in it for you. So after it breaks the trend line, not same time. Some people after it breaks this trend line with this big candlestick, they go in, but I don't normally go in. I wait for a retest. It's because you wait for it to break, then it comes for a retest. So if you have a tight stop loss, normally it will take you out. So what I normally do is wait for it to break, then come for a retest. So here it's my second entry. If I miss this first opportunity, obviously here it's gonna be my second entry. Gonna be my second entry here. Here's gonna be my second entry. Here's gonna be my second entry after the retest. So after it breaks the structure and comes back for a retest, that's where I normally go in because I know that the market still wants to go to the downside. Let me show you also a zone. Zones also play an important role. Just check how it rejected here. This is the 4 hour, guys. Still on the 4 hour. Still on the 4 hour. Don't get amazed. So I'm using the previous higher low. This previous higher low because it broke. So that's where I put my zone. So you see, price broke, came for a retest. That's where I also see that now it's touching my trend line and it broke the trend line. That's where I'll enter my trade. So my stop loss, sometimes I use a bigger stop loss sometimes because I don't like going out, then it goes down without me. So obviously I'll use around 30 pips. That's my minimum. Even if I can put it here, even if I can put it here, but I don't do that because I have to give it space because sometimes it can go down, then come back, then do another retest. So if my stop loss is here, obviously it will take me out. So sometimes it does do that, comes for a retest, then goes down, then comes back again for another retest, then that's when it goes down. So, but if you have a tight stop loss, it's going to be a problem for you, definitely, because it will take you out, because you'll be in the trade. And after a while, it took you out, then the market moved without you being in the trade. So I prefer normally with a minimum is 30 pips stop loss. Some use 5 pips, some use 10 pips. It doesn't matter whichever way your strategy works. So my strategy, I use a minimum of 30 pips, even if I can use a smaller stop loss. But normally that's what I do. I make it breathe. Sometimes you can go in, the news comes, then just does a big candlestick, then it comes back again. So if you have a tight stop loss, obviously you will be out of the trade. So just look for that, guys, so that you always aware. Causing having a tight stop loss will just make you get more losses and things like that. So what I do is after it came for a retest, I go in. So if it moves with a big candlestick, let me just go down to the smaller time frame. Just want to show you. So after it comes here for a retest, then it moves with a big candlestick. What I normally do is I take my stop loss and put it to break even because my entry will be here. Let me just remove this. So let me also remove this. I'm showing you. So what I normally do is when I enter a trade, then it moves with a big candlestick. I normally take my stop loss and put it to break even because I'll be in profits. So what I don't like is being in profits, then getting stopped out. I don't like that. It's better if the trade takes me out on break even. That's better, or I lock in my profits. But I never let my trades run to profit, then takes me out on stop loss. I don't like that. I only like I only like it when it comes, it breaks, it goes, then I put it on break. Even if it comes back again, takes me out, but still, it won't take me out with a loss. But the thing that I really hate is that you get into a trade, it gives you heavy profits, then the next thing it comes back, it moves like this. It's nice, it's moving down. Then the next thing is it comes back and takes you out. So what I do is after it moves heavily, you should remember that, guys. After it moves heavily heavily, you lock your profits. You take your stop loss and put it to break even. Even if it comes back again, it will take you out. That's how I use it, and the strategy has has worked has worked for me because I don't get a lot of losses. Yes, I do get losses, but not a lot because if it comes, takes me out, then it's fine. Then I'll check how it moves, even if it changes the direction, because you know how the market is. You can say, yeah, this is a perfect entry. Then it goes down, then comes back and changes the direction. So when I see profits, I lock them. I lock my profits. I don't want to get into profits, then getting into losses that I don't like. So those are my two entries. So the first entry is the risk entry. This one I do like, but if you want to use the risk entry, please use the 4 hour time frame. Please use the 4 hour time frame because with the smaller time frame, you enter somewhere here and then it's coming back again for third touch, but on the 4 hour, but you on the 1 hour, so you can see. So make sure if you want your risk entry, make sure to go to the 4 hour to get your entry. And in you should know your higher lows and higher highs, guys, because this way you can also see if the market is changing the direction. Because if you can see here, this is our higher low, this is our higher high, higher low, higher high, higher low, higher high, high low, higher high, high low. Then here it's supposed to go up for a higher high, but because it's changing the direction, then we know that it broke. Then now it's creating a lower high and a lower low, a lower high and a lower low. So we should look out for those. You should also know them, guys, in order for you to know, how the market moves, because it's the important thing is knowing how the market moves. Because a lot of people just trade, but they don't check how the market moves. Check first how it moves, impulse correction, then you know that you're looking for a sell entry. Then be patient, guys. Be patient. Because especially here, when it breaks, a lot of people do get in, but eventually it comes back and takes them out. So be patient, wait for it to break, then come for a retest, and also check your zones. Also check your zones because they also extremely important. The zones will also show you that here this is a strong zone, and here the market is changing. And here you can see that the market is changing. It's no longer doing higher highs and higher lows. It's doing lower lows now. That's where you can know that the market is changing. But your zones are extremely important. Even if I can show you here, even if I can show you here that the zones are extremely important because some of the people would have bought, but if you check your zones, you'll see that hasn't broken the structure here, hasn't broken the structure. Some of the people that got the entries, maybe they've got the entries here because of the zones. So zones also really help in entries, but just look out for them. But thank you guys for watching the video. Please make sure to subscribe. Thank you very much, guys. Enjoy your day.